So just gonna do a breakdown here in USDZAR. Took a loss on here. I know why. At the time I was just reading it wrong, but everything's now refined. So we're gonna know now. Okay, so basically, let's pretend we pull up to the chart. So like we pull up, this was the week we're at, right? So like this week wouldn't have started yet. It would have been like that. All right. So okay. So basically we pull up, right? We're like, all right, we've retested the weekly area of interest. As you can see, there's literally like right here, right there, bum, 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 retested it, got a rejection, right? So then we know the weekly's bullish, so we go to the daily. We know the daily at that time we were waiting, right? So basically, if we just, I'll just use these lines here so we can see where everything is, right? So this was, we've broken above now, okay? Daily goes bullish on here, so it breaks above. So now the daily's bullish because this, now we have the trade and trend, right? So now we need to wait for a proper daily pullback. So I don't know which one. Is this just giving me one candle? Perfect. Okay, so we had that proper daily pullback. So you look at it, it's not an indecision candle or a rejection candle or anything like that, because if it was an indecision candle, it would look like one of these, like just giant wicks, can't, like it's just a weak candle, right? But if you can't tell, also what you do, since it's a bearish candle, you just draw the fib levels on there. I go from top to bottom because it's bearish. So you can see this better. So at this point here, you can see that since it's broken past the 43 level on there, it's obviously a strong candle, right? So if you can't tell by using that, then you draw the fib. If it goes past 0.43, it's a strong candle. So that being said, now that it has that proper pullback, we now have to go to the 4-hour. We go to the 4-hour. You can see at the time the 4-hour had a pullback as well too, right? So the other thing as well too is like we're making sure on this that we don't have like an indecision candle. We're at 2 here, but if we had a doji indecision candle here, we cannot take it, right? If we go to 2, if we had a doji indecision candle here, we cannot take it. You have to wait for that to fill. Anytime you try to take after a daily or a weekly indecision candle, that shit will go against you. So you need to, the only time you can take an indecision candle is on the weekly, is when it is either at 3, which means it's pulled back right to the area of interest, and we got it right here. So let's say this was the area of interest, pulled back, and we gave an indecision candle before breaking here. We could take it. And then also the indecision candles at the very top on here, then you can take it, because then you'd be looking for a counter trend trade back to the weekly level. Just ignore that this is the daily, pretend this is the weekly, then we can look for that. But on the daily, the only time we're going to use an indecision candle is if we're at 3. We've pulled back to the area of interest or pulled back to a potential higher low, we cannot take it when it's at a 1. If the indecision candle is here, nope. If an indecision candle, if we come down and we're within this higher low on here, we get an indecision candle at an area of interest, like right here, perfect, we can take it. If it starts to push up and then we get an indecision candle in the middle of the move on here, we cannot take it because price will just reverse, okay? So now we have that proper daily pullback. We go to the 4-hour. We can see the 4 hours had a proper daily pullback as well, or a proper 4-hour pullback. So now that it's had a proper 4-hour pullback, we need to add up our confluences that we're looking to take the trade on here. Since we already reacted off this weekly area of interest on there, then we don't need to see it right now. We already know we reacted, so then we can move down to the daily area of interest. After you have a weekly reaction, then you can go to a daily reaction. So now, okay, now we look at it. This is where we would have pulled up looking. So at the time, we know that the weekly previous structure is all the way down here. So we just draw right there. The daily previous structure is right here. And the 4-hour previous structure is all the way down. Yeah, this is a shift of structure. So if price breaks below this part here, because you can do that smiley, see how there's like, that exaggerated, but anytime you can do like a little smiley face like that, and you have that little dip in there, that is considered a break-in structure every time, okay? See how this candle is there and it breaks like that? So we can clearly see that that's the higher low right here. So in that case, it doesn't really look like we have a previous structure because there's not one obvious. In that case, you would actually use for the previous structure, you just use the previous contrary candle right? So before we had this impulsive move, we had this one counter move here and then went up there. So this is called a contrary candle. So this can still count as the previous structure. So this would be the 4-hour previous structure. Daily, weekly. So as you can see, we have no previous structures yet. The only thing that we would have at the time would basically just be we have all the trends. At this time, we have a 4-hour rejection candle and we have that weekly rejection candle because the weekly was like this engulfing right here, right? So okay, so we go to the 4-hour and be like, okay, the only thing we have is a 4-hour on here. So right now we're at 50. If we get an accumulation break retest, that would only give us 20 under, so we'd be at 20%. That's not enough, right? So what you need to do is at the time when I was reading it, I counted this as an indecision candle because it just looked like a weak candle. But now we know exactly how to draw our indecision candle or how to draw it to see if it's an indecision candle. If it goes past that 43 mark, since it's bearish, you have to draw from the top to the bottom wick. If it goes past that 43 mark, it's not an indecision candle. Like, for example, I did another video on this earlier, but this is bearish on here. This is obviously an indecision candle because it's like you go like this, you're measuring down. If it's less than 50% filled, like it's fine. It's a bearish candle or in rejection candle on there. So this is a rejection candle, but this is not a rejection candle because as you can see, like there's an opposite, right? Like if it's a bearish candle, it starts where the bullish candle pops up and then drops down because this is more than 50% filled at the bottom here. This is a strong candle, right? But this, you pop up, comes all the way back down, fail. This here, pop up, come all the way back down, fail. It's not a very strong candle. Draw bearish. Like you can just tell, like, if you can't tell, then you draw that. But at the time, I just didn't have proper rules to find it. But now I know. So I draw from the top to the bottom on here. You can see that this clearly went past the 43% mark. If it had pulled back and like closed like there, I'd have been like, oh, okay, that's definitely an indecision candle because it closes as a weak candle. But once it goes past that 43% mark on there, it's too strong. So here we went past. This obviously is an indecision candle, so you don't have to count that. But if you can't tell, like for example, this one right here, and this is a engulfing candle, right? So that's fine. You can trade against those because it's just a proper pullback. But the second, like if you do this and you look at it and you're like, okay, this went past the 43% mark, then you can't take it like that. So that being said, we go down to the 4-hour now. We don't have enough confluences, so we would just go forward. At the time, I took the trade right here because I thought I had enough confluences. Basically, on the 30-minute, you can see that there's an accumulation of 4 wicks. We broke. We're still within the higher high on here on the 15 and the higher or on the 30 and a higher low, so we can take any candles within here. We took this one and we got smacked. And the reason why we got smacked is because we don't have a high enough grade. Because at the time, yes, like now we got the previous daily structure and the 4-hour structure. So like this is when it would make sense to actually, if we get that signal, then like for example, so there we have 4 wicks, 1, 2, 3, 4. We broke above. We just need a retest and an engulfing. Like you need a bearish candle, then an engulfing. You can't have like, like 2 bullish candles. Like it has to be a bearish candle like this, and then rejection candle like this. This is a morning star engulfing right here. So basically like this, and then it pops up. So we're looking for that. Now, okay, we got a rejection candle. It's still bearish. It's still bearish. We just need that bullish engulfing candle to come back over the level. Basically, this is not this thing. This is a rejection. This is not an engulfing candle. So it tapped in here and it rejected, and then engulfing. So basically, this means that it's just going to go down. It's basically going against you now. Like you have 4 wicks. We broke. We retested, and then we're going to. Actually, that doesn't count because that is a bearish candle. So, but either way, we can't take that trade because of that. So we would have avoided this loss completely, and then we would have saved ourselves. Basically, if we go on here, we can see USDZAR. When I did it, because I counted that candle as a daily rejection candle, it didn't count properly. So we know exactly what it is. So that's that loss reviewed. And it was only because we counted a daily rejection candle, which shouldn't have been a rejection candle. And that's why it's important to have the confluences, because if you don't have the confluences, you just take it because it looks good, because it meets all the other rules, it will fail like that. Because technically this meets all the rules. The only thing it doesn't meet is because we don't have a high enough grade. We need at least a 90 in order to take it, right? So that's that loss reviewed on there. And that's how we're going to fix that.